Hello, good afternoon. At least it's almost kind of evening now. June 21st. Maybe I should start saying the dates on these things, but you can see when they're recorded. Again, Ken Krager from Black Swan Financial Advisors, doing another podcast. More topics about Social Security, SSI, really important stuff for most of us as we get into retirement and we want to be able to maximize our retirement funds and income, and what should we do. And especially when we have people in our family who have special needs and have disabilities, then they might be able to claim on our Social Security record and get more than they would get on SSI, for example. But Black Swan Financial Advisors, my podcast, and again, expert strategies on these government benefits. All videos are for educational purposes only. And here's my website, actually, which should be up by the middle of July. I'm hoping to get it really close to final this weekend. Subscribe to my YouTube channel, listen to my podcast, and there's some playlists about government benefits, about trading and education, and all. There's several different, I think, very valuable playlists. And then send me an email, please. Contact me and let's have a discussion. All right. One of the things that has come up recently, I've been actually talking to my brother about this, is working while you're on Social Security and so forth. And it's a really important question because, most of us are not going to have enough income when we get into retirement to be comfortable. And unfortunately, a lot of people have to work. I know my parents are on Social Security, and I think their Social Security, between the two of them, they both have work history, is less than $4,000 a month, or about $4,000. And I don't even know how a couple could live on that much anymore and have any kind of lifestyle. But do you have a lot of people, especially with the financial crisis and these other financial situations that have come up, is a lot of people end up having to go back to work after they had hoped that they could retire. So anyway, let's understand the rules. Let's understand what we can do and what the impact is if I go to work. Now, there's other benefits to work. I kind of like working sometimes. Sometimes you can get better health care benefits than you would get from Medicare. And if you retire early, 62, 63, 64, you don't have Medicare. So a lot of people will work, even take part-time jobs that have medical insurance. So there are other benefits that you need to think about. One of the things too that families with members with special needs have to take into account is what I would call family income, the combined income. And so, for example, my adult daughter in Arizona right now, SSI pays $914 a month. If I retire or start claiming Social Security, she can claim a dependent benefit on my Social Security, and it's based, even if I retired early at 62 and started getting my benefit, her benefit is based on my full retirement age benefit. So she would get 50% of that, and according to the projections right now, that would be more like $1,500 a month, or about $1,400 a month. And that's $400 or $500 a month more than she gets on SSI. So that, and it's not needs based, right? So anyway, and it's not considered earned income, so it's not going to affect her SSI benefit of Medicaid, right? So think about that too, because Medicaid benefits are based on financial need, based on earned income, and a Social Security disability for a dependent on your Social Security is not going to be counted as income for her. So I mean, that's an extra $400 or $500 a month that she could get in income that would not affect her Medicaid healthcare benefits. So how much can I make if I start working? If how much do my benefits reduce? When would they stop? How much are they reduced by? Age limits, work credit. Well, if I'm working, how's that going to affect my future Social Security benefits? And then can I work when I'm on SSI? Again, this would be more for your dependents or people that are on SSI, okay? Working while claiming Social Security benefits. So we're going to refer to this full retirement age quite a bit. And right now in 2023, you have an annual earnings limit of $21,240 that you can earn before it starts to impact your Social Security benefit, okay? So we'll go through an example and see how this works in just a second, but essentially you could get a job, you can make $21,240 a year, it's an annual limit. So, I mean, I guess, you could work half the year, earn $21,240 or less, and then don't work the rest of half the year and you'll get your full benefits, okay? Now, it's interesting when you start approaching full retirement age, this goes up a lot, because what happens is when you are full retirement age, there are no earnings limit. You can get a job and you can earn as much as you want, okay? And, that could be a strategy for, instead of, delaying your Social Security retirement until you're 68 or 69 or 70 and getting a few percent more in your Social Security, if you have pretty high earnings potential, you might just work those years, because you're going to get your Social Security benefit anyway. Okay, so you can earn as much extra income as you want. Now, here's an example, okay? So this is if you retired before your full retirement age, okay? And so the annual limit, again, is $21,240, and after that, your benefit is reduced $1 for every $2 you earn. So for example, you earn $31,240, and I made this really simple. That's $10,000 over the limit. So for every $2 you earn, your benefit gets reduced by $1. So your benefit's going to get reduced by $5,000 per year. Okay, now let's assume, so this is interesting, this computation has nothing, zero, to do with how much your Social Security benefit is. If you only had $5,000 a year Social Security benefit, you would be reduced by $5,000 and you'd have nothing. If you had a $20,000 Social Security benefit, you would be reduced by the same $5,000 a year. So this is really kind of, in my opinion, it's a very poor, because it really penalizes the people that have the lower Social Security. So anyway, no matter how much your benefit is, it's reduced by $5,000 per year. So, for example, you might have a $12,000 benefit, and it got reduced to $7,000. But if you had a $25,000 benefit, you still get $20,000. So this really, for every $1 you earn, every $2 you earn, you lose $1. Okay. Now in the year you retire, your full retirement age, when you hit that, for me, it's 67. Say my birthday is in July, So I could earn up to $56,520 all the way up until July, my birth month. And as long as I didn't get over that limit, I'm not going to get reduced. In fact, if I do get reduced, I think it's $1 for every $3 you earn. So, I mean, you'd have to earn $150,000 or so before you would really start losing a lot of your benefits. But once you hit your full retirement age, guess what? You can earn as much as you want. Again, so you might think about that. Maybe those years between your full retirement age, for a year or two, if you could work and you can make bank, and especially, put some money away, it might be valuable for you. Okay, so let's talk about work credit. So it's kind of interesting because if you're working and you make enough that you reduce your Social Security benefit, especially if you make enough that you have zero benefit, then it's just like you weren't retired during that month, and they count by months. And so this is a way actually that you could add good months to your retirement history, and you can increase your Social Security benefit once you hit full retirement age. So basically you can get credit. So there's two ways that you can increase your Social Security benefit. And one of them is that you get older and you're closer to your full retirement age, you get credit for the months you worked. So, for example, if I retired, I decide to take Social Security when I'm 62, and I get a reduced benefit. It's actually 30% less than my full retirement age. It computes to roughly 8% a year for every year you take it early. And then what'll happen, it's actually 5%, whatever. It averages out. The first year it's 30, then 25, then 20, and then that last year there's like a 10% jump. But if you're working, say in year 60, I'm 63 and I get a job, and like I said, maybe I want to make bank, maybe I have a good paying job and I have zero benefit that year, because I earn more than that 56, I earn more than twice my 2 times the annual limit, and I get zero benefit. Well, that means I get credit. I get work history credit for the months that I work that I get no benefit. Now, if you work and you don't get a benefit, especially at the beginning, they'll send you a check. They'll be sending you a check, and you're supposed to report whether you were working and getting income. So don't spend it, because you'll just have to pay it back. Okay, so don't spend it. And if you're working and making more income than you did in pre-retirement, keep going and earn those work credits, and so you get 2 benefits. You'll get credit for the months that you work. So say I worked all of the year that I was 63, it would be like I retired a year later than I actually retired. So when you hit your full retirement age, your benefits get recalculated based on any work history. And the other thing is, and this could happen too, is sometimes for some people, like right now, I'm making a lot more money right now than I was 20 years ago. Okay, every year, my annual income is a lot higher, and it's based on your work history and the highest earnings. So every single month. So if you're having higher earnings to add to your work history, and you're adding months to your work history, then when you hit your full retirement age, your benefits will be recalculated and your benefit will go up. So, that's really important. And I want to say that because this is actually the strategy that I'm going to use myself. I'm going to retire when I'm 62. Because my daughter, I already mentioned this, my daughter's SSI benefit is $914 a month. But half of my Social Security benefit is going to be more like $1,400. So I'm going to take an early retirement, but I'm going to probably keep working. So every single month I work, it's like I didn't retire. But there used to be a strategy, it was called file and suspend, where you could file, your spouse or a dependent could file their dependent benefit under yours, and then you could suspend your benefit and keep working. But Congress eliminated that. So you basically just have to keep working and report your monthly income. Don't spend your benefit, and that way my daughter gets a higher benefit. I get more work history, and I can maximize my family's Social Security benefit by doing that. Because if I just keep working, and for a couple more years, that's like $500 a month that my daughter doesn't get for, say 3 years. What's that? That's what, $18,000? That's pretty significant. So anyway, let's talk about, so here's the example, okay? You retire at 62, you have an income limit. Say your Social Security benefit is $20,000 a year. Okay, that's less than $2,000 a month. And when you're 63, you get a job and you earn $50,000. So 50,000 minus 21 means that you earned $28,760. Too much. And you're going to have to, for every $2 you earn, you give one back. So you're going to have to give $14,380 of your benefit back, but you still have $5,600 left. But say, for example, your Social Security benefit was only $15,000 a year. It would be reduced by $14,380, and you would have almost no benefit left. Now, if you earned $61,240, right, which is 42 times your Social Security benefit, your Social Security benefit is going to be zero. Now you have good work history, okay, and you would get 12 months of work history. And like I said, it's between 5 and 8%, depends on which year it is, because the closer you get to full retirement age, the bigger the percentage difference is. But you would get that work credit. Let's talk about SSI for a minute. Working in SSI, your SSI, this is a little more complicated, and it's computed state by state. You got to remember that SSI is a needs-based system, so you have to qualify for it already by having a low income, like very low income, and almost no assets, right? So, but the thing is that SSI is tied to a monetary benefit and Medicaid, okay? And so you need to be careful that you don't get disqualified by earning too much income to kick you off of Medicaid. If we're talking about a dependent, a person with a disability, or anybody that's on SSI. And so it's really kind of sad, because a lot of our loved ones who have disabilities and they would like to work, and you would like them to get a good job, but maybe, they just can't do a job that would make them a living income and give them health care benefits and all that. And the alternative is SSI and Medicaid, which you have to live in poverty to have, right? Because you can't have earned income above a certain level. So it's really important to remember that each state is different, and you need to talk to the state. Some earnings get excluded each month. So say you're working, you're on SSI, or your loved one is on SSI, and say you make $1,000 a month. Okay, well, I'm telling you that's probably going to be too much. But each state is different. But what you can do is when they do the computation and figure out how much of your earned income is counting towards your eligibility, that they'll take out certain expenses related to working and living and stuff, and the rules vary by state. Here's an example of the things that can reduce the earned income, so that you want to stay under that limit so that your loved one does not get disqualified from Medicaid. So now if they're under your health insurance, then that would be different. But the problem is if they get disqualified and they go off of Medicaid and SSI, when they're no longer on your policy anymore, they have to requalify. Okay, and that could take time, a lot of time. And so say they're on your insurance, your health insurance and everything, and then you retire and you're on Medicare. They can't be on your Medicare, okay? So Medicare is individual. They're no longer on your work health insurance. They have to get their own. They don't qualify for Medicare. They don't have a work history. So now they have to go try to re-qualify for SSI, and now you've got to go through all that paperwork and time and everything. So the first $20 and the first $65 earned every month is automatically not counted as earned income. So that's $85. If you're a student under 22, and unfortunately, I mean, this would give you a pretty good exclusion of earned income. This is probably what helps the most, is if you have a disability, or your loved one has a disability, and there's work-related expenses like transportation or medical equipment, or say you got to buy an Uber, or you got to pay into some transportation to get your loved one to work and back. Well, that can be taken off of the earned income and not counted. But again, you'll have to work with your state representative and figure it out. But that's why a lot of people with disabilities will only work part-time. Unfortunately, they make less than minimum wage on their earnings, and a lot of that has to do with if they earn too much money, you'll disqualify them from their health care benefits. Now there are ABLE accounts. I think I mentioned it right here. No, I didn't mention it here. So you hear about ABLE accounts, and they help you shelter money, you might say, so that you can still qualify for SSI, but it's not income, that's assets. And unfortunately, in Arizona anyway, and as far as I can tell, it's not like an IRA or a 401k or whatever, where you can put pre-tax dollars in an account and it wouldn't count towards your income. Oh, and by the way, you still might have to pay federal and state income tax on your earnings too. So an ABLE account is not going to help you in terms of income and how much income you can earn while you're still on SSI. So get with your state. You'll have to find out what the particular rules are. And I'm not sure, is it dollar for dollar reduction or whatever? Each state's going to be different. So anyway, I hope you found that valuable. I spent a little bit longer on this particular podcast than normal. It's really important, and it's super, super complex topic. Please contact me if you have any questions. Again, thanks for joining my podcast. And we were talking about Social Security, SSI, ABLE accounts, Medicare, Medicaid. We actually kind of touched on all of those. The videos for educational purposes only. And have a great day and contact me. I appreciate it. Thanks. Bye.